The midterm elections are coming up on November 8th. The current administration, the Democrats are in charge. They control the House, the Senate, and the presidency, and they're trying to hold the economy for the next 6 weeks. This includes the Fed as well. After the midterm election, don't be surprised if there's a financial disaster. This includes the stock market, the crypto market, the housing market, overall economy in general. This is not a political channel, and all I'm trying to do is give you straight facts. And do subscribe, and I'll post updates regularly on this channel so you'll be well prepared for what's going on. So if something goes wrong, then Democrats will be blamed. The Democrats who are in charge, they need to keep the voters happy till November 8th. High gas prices make the voters very unhappy. The current administration knows this. 5 months ago, from our Strategic Petroleum Reserve, they started to release the oil. The sole purpose of doing this was to lower gas prices to keep voters happy until the midterm elections. We've been releasing little above 1 million barrels of oil a day and will continue to do so until the 31st of October, which is just 8 days prior to the midterm elections. We're currently producing 12 million barrels per day, so 1 million barrels of oil from our Strategic Petroleum Reserve is good enough to manipulate the economics of our oil market. The Strategic Petroleum Reserve, which is supposed to be used in emergencies such as natural disasters or other emergencies, but our current administration is using it for their own benefits. For your reference, Alaska produces 500,000 barrels of oil per day. The emergency release is currently helping to reduce the prices of the gas. However, this is only temporary. The important thing you need to keep in mind, we need to refill our Strategic Petroleum Reserve eventually, and the current administration will probably refill it after the midterm elections. And think about what will happen once we start to refill the petroleum reserve. This will create more demand, and the oil prices will go up. The first purchase order is to purchase 60 million barrels of oil at the end of the year. So after the midterm election, don't be surprised if oil prices go up. When you release oil, it reduces demand, then the prices go down. And when you do the opposite and buy more oil, this will create more demand and the prices go up. This is how it works. Goldman Sachs is predicting the oil prices will go to $125 per barrel by the end of the year. For your reference, the current oil price is a little under $80. So all I'm saying is be prepared for high gasoline prices after the midterm elections. Then comes quantitative tightening. This will raise the interest rates and cause liquidity crisis. If you're not familiar with what it is, here's the easy way to understand. The Federal Reserve prints money, which is called quantitative easing. And when the Fed removes money from our economic system, it's called quantitative tightening. We've printed way too much money in 2020, hence the stock was able to rally in 2020. We had to print back then because we had lockdowns. We had the unemployment skyrocketing and the GDP fell by 3.5%. When you print trillions of dollars and inject new money into the economy, the new money is going to inflate everything, including the stock market. Because of the money printing, we're facing high inflation. To lower inflation, what the Federal Reserve is trying to do is take the money back. Once the Federal Reserve starts to take the money back, then the stock market will go down. The Fed said they're going to tighten by $47.5 billion a month for June, July, and August, but they only removed $47 billion for those 3 months. They failed to do so because as they tighten, like they said, it will hurt the stock market, housing market, just the economy in general. You can check at their website. Everyone has access to that website. We have the midterm elections, and hence the Fed didn't do as they said. Even Fed Chairman Jerome Powell acknowledged this and said they'll do the tighten up to $95 billion per month starting soon. I'm expecting it to happen after the midterm elections, and at that point, Fed won't hold back, and we might see the stock market get destroyed. They'll do so for 2 years, according to the Fed. Why 2 years, and why $95 billion per month? We printed so much money that the banks and financial institutions don't know what to do with the excess money. If you don't believe me, you can look at the Federal Reserve website. The banks and the financial institutions kept the excess cash at the Fed for a small interest rate. The banks and financial institutions are doing this because they literally have nothing better to do with the money. This is what the reverse repo market is. Take a look at the repo market for the last 8 years at the Federal Reserve website. Just look at how much money the banks and the financial institutions have parked at the Fed. It's $2.2 trillion. That's how much the banks and financial institutions have at the Federal Reserve and don't know what to do with it. Look at the time of the start of the pandemic. Look at 2020, 2021, and 2022. That's the time the Fed started to print trillions of dollars. As I said earlier, the Fed wants to remove money back for 2 years. Do you know why the Fed wants to remove $95 billion per month for 2 years? It's because $95 billion per month for 2 years equals $2.2 trillion. That's exactly the same amount of money that's sitting unused in the reverse repo market. The Fed tried to do soft landing, but it failed, at least till now. The Feds print money, the stock goes up. The Fed takes money, the stock market goes down. You don't fight the Fed. I understand the stock market's not connected directly to the economy, but it is connected directly with the money printer. The problem lies not in the stock market, but in the debt market. Look at the 10-year yield. The 10-year yield goes up, then basically we're screwed. As the interest rate rise, the Fed needs to pay more interest on the debt. They're no exception, and they have a budget. If the interest rates go up 2% or 3%, can the federal government withstand that for 1 year? Of course, yes, for a short amount of time. However, can they withstand for extended period of time, like 3 years, 4 years, or 5 years? Absolutely not. This is what I'm predicting. Cryptos are going to react faster than stocks. Once that happens, the Fed is going to pivot. That's when the Fed will reduce the interest rates again and start the money printers back on, and this will skyrocket the stock market and crypto market. However, there's going to be a trade-off. The trade-off is going to be more inflation. The inflation is going to be worse than the current levels, and there's going to be a widening wealth gap. The rich get richer, the poor get poorer, and the middle class shrinks even more. It's not just the stock market. The government tax revenue will go up because of this. The government loves this. It's soared for the past 2 years from capital gains. Even the state government collected a record amount of taxes due to capital gains. Just think about what will happen to the tax revenue this year and next year. How's the stock market doing this year? If you don't make any money from the stock market, the government will not be able to collect taxes from your capital gains. The Fed needs money because of the high interest rates. They'll get hit as well. For all reasons, financial and political, the Federal Reserve will start printing again. They'll do so because they'll have two options: either collapse the country or turn the money printers back on, which will cause inflation. The Fed will choose more inflation. They'll have no choice. The Fed cannot survive the deflationary environment. That's because they cannot tax deflation. They need inflation to pay for the old debt. Therefore, the Fed will turn the money printers back on. When that happens, we're going to have more inflation, including the stock market. Will the Fed turn the money printers on as soon as the midterm elections are over in November? I don't think so, but it might happen sometime in 2023. When the Fed starts printing money, they won't do it randomly. The Fed will announce it. You should pay attention to the monthly CPI, PCE reports, and FOMC meetings, and form your own opinion. And don't follow anyone blindly. Also, you need to track the quantitative tightening. You can check this on the Federal Reserve website. You can see how much money they've been removing from the economy and how the market has been reacting. Also, the 10-year yield curve. The higher the yield, the stock market reacts poorly. Finally, pay attention to the reverse repo market. This is also at the Federal Reserve's website. That's all the data I'm looking to predict. All these data are publicly available and free. Please take advantage of these data points. When the Fed starts to print money, it's going to happen in 2 phases. The first phase, the Fed will stop raising interest rates and stop quantitative tightening, and the second is to print the money again. However, if there's a liquidity crisis in the debt market, the Fed will immediately restart the money printers back on directly, which is very unlikely, because that'll cause a huge financial crisis. Thanks for watching. Until next time.